Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on NYCB. We are bullish on offices because people need to work, and what are they going to do, work from home?
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everybody, welcome to the Laughing Stock. Hey Dane, how are you?
Good, how are you, man?
Yeah, doing very good. Interesting to see this where this NYCB will land.
Yeah, that's an interesting one. I feel like owning a lot of real estate right now in New York City is not a great idea.
Yeah, they dropped like 30% yesterday.
Yeah, I think they got slaughtered on earnings, which I think everyone kind of knew was. I don't know. I feel like I had read that they were predicting that it was going to be ugly. I don't maybe not that ugly, but I mean, just office real estate right now it's not an asset you want to own. I mean, I'm not saying now's not probably a good time to maybe start buying stuff, but owning that through this last period, it's been kind of rough.
Yeah. Speaking of offices, are you in yours or?
Yeah, this is my new office. You like it?
Yeah, I think you have upgraded a little bit here.
Yeah, the weather's been great.
Yeah, yeah, that's good. It's not so great where I live, but I'm happy to see that you are doing well.
Yeah, I'll fly you down tomorrow. All right.
Yeah, okay. So
yes,
on today's
like I said,
stream,
as soon as BNED becomes that 27 bagger.
Yeah, exactly. That's what we're hoping for. Welcome everyone who's watching. We appreciate that you have tuned in, and feel free to use the chat today and give us some tickers as always. And we have had some interest in the sheets lately as well, Dane, and people are asking if we can give it away, and we have said that we're not going to do that, but we think that the best way you can learn this entire strategy and process is to go through that whole thing and build it yourself, and we are happy to help you with that, and we are happy to try at least to answer as best as we can if you have some questions about the sheets as well, right Dane?
Yeah, and I just to your point, like I do want to bring up to people, because like I don't want to sound like we're being jerks and saying like, no, you can't use our thing, but you have to understand that number one, there's a lot of things going on in the background here once you've learned to build these sheets that like you need to be aware of. And like if I hand you this sheet, the first time there's an error, which will probably be almost immediately for you, you won't know what to do. You won't know how to fix it. You won't know, like there's so much going into this on how you update things. And like honestly, I'd have to teach you an entire course on just how to use my version of it. I know it because I built it from the ground up. But it's like handing someone another program, like for anything, and being like, here you go, good luck with it. Like there's so much nuance that goes into it, and I constantly am tweaking things too. So I think to Johnny's point, it's not that we're not just giving it away because and don't get me wrong, it is a labor of love. Like we did put a lot of work into these to get these up and running, but if I could get it into a state where it'd be a little bit easier, like maybe, but there's just so much going on here, and it really wouldn't do you any good to just take these sheets from us, especially in the condition that they're working in. For me, I mean, I can't speak for Johnny's per se, but for mine, I can't just hand this to someone. And you have to have all the data services too, which means you'd have to learn how to code in the data service. And it literally took me about a year of playing around to get it to work. And I'm telling you, if you haven't gone through that time, you will not understand how these work. They're very complicated. And, trust me, if I was any more savvy and I could code better than I can, I would learn like Python or Ruby or something and build this like a real program. I mean, Excel works, and Google Sheets works, but there's obviously better ways to do this. We just saw what RK was doing and was like, oh, well, okay, here's like a program that like I can learn and I can do this without having to teach myself like an entire coding language.
Yeah. And we had some questions about if we had access to Roaring Kitty's sheet. We haven't. The way we have done it is to watch his streams, all of them, and we have paused, we have rewind, we have taken notes and just asked around on forums. That's how we managed to build it. And I agree with everything Dane said. And not only that, like a week ago we were. What was it, Dane? 40 minutes late because you had to fix some issues with your sheet, and then you need to know what to look for and everything to identify it. And it's hard work, but it's possible. So just start if you are interested, and we'll try to help you as much as we can, because we want more people to tune in and participate and see the same numbers as we do and everything like that. That's the goal of the stream. So just wanted to point that out. And we will try to help you if you. I also spent a year on it at least, and I mean I'm right now I'm building out my universe in a little bit of different way. So there's always things that we are improving and doing in the background, and I don't think you will see it when I actually have that work done, but I will know what it does for me. There's a reason that I do it.
Yeah, and I just want to show this real quick. So this is, I don't know how well you guys can see this on my phone here, but all these are literally timestamps for, sorry, because I know the let me take my background off for a second here. What did I just do? How do I take this off here? I don't know. Is there a way to just take it off? Oh, there we go. I think that does it. But like, these are all timestamps from watching his videos and finding questions that I had, which led to more questions. I mean, these are literally all just from his streams. So if you think like you can just like build this, like it takes a lot of work, and like you have to comprehend what he was doing and why he built these the way he did. And you have to have like a pretty good understanding of finance on top of it. So it was kind of like this mix of learning how to build this out as I was learning finance. Don't get me wrong, it's awesome to learn finance this way because you have to really learn how a balance sheet works. Because when you're pulling data in or an income statement and cash flows and all these things, like you have to be able to understand why you're calculating things the way you did. And if you want your numbers to match up to the way his numbers looked, you have to know how he did his division and whatnot, and at least get it as close as possible. And it took a long time of playing around and tinkering with things until I got it where I was comfortable, because up until that point, I wasn't comfortable investing in a lot of things because I wasn't really sure I was as confident as I would without having the sheets. Once I had the sheets and I started to really learn how to use them and how to understand what's going on with the sheets, then it made sense. But up until that point, there's so much that it's not really just like an easy way to hop into this kind of thing.
No. It's an excellent point, and I think as anything else in life, you get back what you put in, So it's and I think I have answered this in the past, but our sheets are by no means perfect. There's mistakes in them. They don't do what we really want to do at sometimes. But it works for us. We know what to look for by using them. We know what we can trust, not 100% but close to it, and we know what we are a bit more unsure of. And that's where we maybe go to Seeking Alpha. We pull off the balance sheet and look a bit further, So,
Right.
yeah. Now, I just... I feel a bit bad when I say no, because I know the work you have to go through if you are entirely new to this, and it is hard. But it is possible.
Yeah, no, I agree. And I also don't think you'll have the conviction like you would if you really understand what's going in the sheets. Like, it's really tough to say how confident you are in something when you're not really sure what you're doing.
Yeah.
So it's just a lot of reasons. And like I said, specifically, you can't just take this sheet because you have to pay for these data services, which they're not cheap. So
No. You need to update a lot of things. If we just send it to someone, they need to update a lot of things, and you need to know where to do that and everything. But okay.
And like when I'm saying that too, like this is auto linked to my account. So when I click things, it automatically goes to like my web pages. You would have to manually go through it and edit all of those for your page. So it's not like it's just this generic thing that anyone can use. It's very specific to my usage of it.
Yeah, for sure. No, but I hope we can help someone who wants to build out the sheet. And I think I mentioned this in past. I don't remember, but when I started watching Roaring Kitty, I tried to build the sheets and I gave up. I tried my best and I gave up after a month or something, because I didn't know anything about Google Sheets as well. And all the formulas, where to put, how to tweak them to pull things in, it was too much for me. But then I tried again, and I'm happy that I did, because it worked a little bit better when I found some help on some forums and some Discord servers and stuff like that. And then I just stuck with it, and now I have my version of it.
Yeah, and to Johnny's point too. Yeah, I tried multiple times trying to work with Excel, and it just became too much. And eventually I purchased this, which is like a ridiculous textbook here. I can get my chair back here. This thing, and I read all of this. I mean, this is, I don't even know, 1,000 pages on Excel. And, like you can even see my pages, how much I opened this book. Like, I just had to constantly refer to these kind of things. If you're questioning, it's the Excel. Now there might be a newer version, but it's called the Bible for a reason. But and even that wasn't everything I needed, but that was a great starting point, and it taught me a lot of the basics of Excel and how to get going. And from there, now I at least had enough of an understanding that I could really start to build some things out. Yeah. But it takes a lot of time.
Yeah. And by the way, everyone who is interested here, there are websites that does similar things. I used Ticker Terminal for a little bit of time, but I just couldn't. It wasn't the same as the Roaring Kitty sheet, So I couldn't. I know a lot of people use it, and I think it's very good. But I prefer my sheet over it now that I have it. So there are websites out there also you can use if that's better for you.
And just one final point, just to explain to you guys how much I would like to help you too. If anyone actually wants to build out these worksheets, I would literally do like a workshop where Johnny and I go piece through our different things to show you guys how we do it. So I'm willing to do that. So you can build it and have it work to yours. And honestly, we'd probably find all kind of ways to improve things if I actually did that with a bunch of people. But, I'd be willing to do something like that if anyone's interested. So, you guys can always throw something in the comments if that was a thing, and maybe we could do that sometime. Obviously it would be a long, build, but we could do it.
That would be many parts of that series.
Yes, that would be a multi-part series. But
also,
that's
keep in mind it's not
something like that.
Yeah, it's not just a fundamental sheet. It's a whole. Everything is connected.
Right.
Yeah. All right.
Do you want to start with the dash, or what do you want to do?
Yeah, I'm thinking we should go into the dashboard here. Friday was not a good day for BNED, but I see a lot of other things are up here, and I think in total it has been a pretty solid week, right?
Yeah, I mean, there was a big pullback yesterday, which I think just had to do with number one. There's a bunch of people probably trading it, so it's whatever. It's noise, and it's definitely up. I think it would have if it wouldn't have had the decline yesterday. It was up how much this week?
No, I mean,
20%?
I got in at 78 cents on Monday.
Yeah, so it must have been up at least like 12 or 13% for the week. So it wasn't obviously a bad week by any means. It was actually a great week, but there was a decent pullback yesterday. But there was just a quick news article that poked out besides the earnings, which is awesome. I'm excited for the earnings. We'll see where that lands. But it was basically saying that they're at risk of being delisted because they're under $1, which we all kind of knew. So I don't know. Maybe there's people out there who don't understand what that means or what the company is and think that that's really dangerous, that they're going to be delisted. It's probably a bunch of people who don't follow it and just saw that and maybe are like, nah, that's too risky for me. I'm not doing that, which is fine. Because honestly, I was telling Johnny it's probably the last area I might be able to get some purchases in where I want to keep my cost basis low. We'll see. Maybe after earnings, if earnings are really good or something, I might buy one more time. But we'll have to see from here. And it's going to evolve. You know, it's the kind of thing is, you know, today where I value it versus where I value it tomorrow may change. So I might be happy to buy in a higher amount as time goes on. It's just trying to see where we're going to land.
Yeah. And I was thinking, I don't know, the earnings is on Thursday, right? And I'm doing the stream on Thursday, but I'm not sure if I'm gonna tune into the earnings call. But maybe we can like do a recap or something on in a week on Saturday.
Yeah, no, that's fine. And you know, I'm going to tune in for the earnings call, I'm sure. But at least on your stream, you'll at least see what the EPS was and what revenues were. So
yeah, I can go through it quickly, but I'm just not sure if people are interested to sit and listen to it.
yeah, I don't know about the actual transcript, but I'm sure they'll be interested just in whatever they put out because they'll have to put their presentation out. So you'll at least have just the numbers.
Yeah. Now we can try to make it interesting on Thursday, and of course it's something we have looked forward. And the week after is ALTO, 14 of March, I think ALTO is.
What did ALTO do this week?
I held up pretty good, 122, I think it is at now.
Oh yeah, it is back up.
Sorry, 222.
Yeah, we'll see where it goes from here. It's definitely starting to hold now up here.
Yeah, and there's been some positive things in the industry and all those things, but yeah, we don't need to repeat this. Management need to deliver now all those things.
Yeah, they do. They need to make up for that last. I mean, honestly, if they have a decent earnings report here, that could be really big for the stock.
Yeah,
that's really what ALTO needs.
I mean, ahead of the Q3 one, it was more than double today's price, and I guess you can say that things have changed, obviously, because of that. But the outlook has maybe not changed too much. You know what I mean?
Yeah, I'm kind of surprised. I'm just looking at the Yahoo thing, and they're saying that the estimate is -8 cents right now. That seems really low.
Yeah, and I think Justin was estimating that it was like 3 cents in plus or something on this one, but don't take my word for it. I just think I remembered that was his number.
Gotcha.
But then I was thinking, I didn't say this to you, but I was thinking, do you remember Kingdom's article on BNED?
Yes.
He goes through a risk that he sees about what do you say, cannibalization?
Cannibalization, yeah.
Yeah. I was thinking maybe we can talk a little bit about is that a risk you are worried about, or because Courage asked him in the comments if he could make some models with the numbers and everything, and he said yeah I can get there, but I'm worried about this happening from the main business, that they eat up the revenue and stuff like that. How do you see that scenario?
I'm not quite sure what you're saying in terms of cannibalization here. Because I just looked at, I don't think it was in the Kingdom. I think it was in the first Courage article that he asked that question.
Could be in Courage article, yeah.
Yeah, hang on, I'm trying to find.
Yeah, probably it's in his article.
Yeah, I'm not sure where you got cannibalization from, because I see what he says, and he's like, I'm trying to get there on BNED. I couldn't do it. One thing to keep an eye on is the recent company references to doing an equity offering to address the debt. He's like, have talked to a couple people where that's keeping them from buying. So a non-dilutive solution would be the spark you're looking for, but an offering could really cap your upside. And then he goes, why would they sell equity in the hole when the free cash flow from FDC pipeline's ramping up and they just generated 61 million in free cash flow? And then he said, I don't know. They've been the ones saying it, not me. But this also brings up a point, because if you followed anything that BLCM and Panagos, the guy that they brought on, were talking about, they're talking about getting preferred shares in order to raise that capital to break the debt. So that wouldn't dilute shareholders. They're not talking common equity. They're talking preferred. So, I mean, if that's what they were referring to, and maybe that's what Kingdom thought is, they're just talking about offering equity. Well, you could argue that the equity is preferred shares. So it could be that they're saying that they would offer preferred shares. At this point, especially with the stock price being low, offering shares is going to really dilute yourself, and it's not going to increase the price of the stock. It's not going to generate, all it's going to do is really, really hurt shareholders. So I would think that's probably one of the worst things BNED as a company could do. And don't get me wrong, this is from a while ago now. I mean, these comments are from early December. So I don't think it probably holds much anymore, to be honest. But what he's saying is, and then Courage says, you're a big financial modeling guy. If you start modeling what FTC could look like on a $1.6 billion revenue, it's not that hard to get plus 75 million of adjusted EBITDA, which makes the debt easier to refinance, and you generate a lot of free cash flow. So, and then so maybe this is what you're talking about, because he's like, I have a harder time modeling how fast that erodes the core business. As you suggest above, it was good to see FTC growing faster than the core business was shrinking. So what he's saying is, he's saying the core business, as in where they were selling books and stuff a la carte, that had been shrinking for forever. And that's why BNED is trading where it is. The FTC model, though, kind of came out of nowhere, and this has been extremely profitable. And it's totally changed the avenue. So the company's pivoted to the FDC model, which, who cares what's happening with the old business? To be honest, the traditional business of just selling textbooks one by one, it's going to keep shrinking because it's not really a great market for it. The cost savings comes from an FDC model where you're buying in bulk, not from an a la carte model, because people are going to find cheaper ways to buy their books. That's where the FDC model came in and kind of, so this comment doesn't really hold any worry to me at all. It's not really referring to anything anymore. I would say that, if they offered preferred shares, that's a good move in my opinion, because all it does is you don't have to pay preferred dividends. People are going to buy preferred shares because every once in a while, sure, you're going to get good money from it. But you don't have to then worry about the interest payments on the debt, because you could pay off a good chunk of the debt with the preferred shares. And then if you have a bad quarter or something like that, or two of the quarters of the year for BNED aren't going to be as productive as the 2 quarters with the textbooks when they sell for the majority of schools, being the fall and spring semester. So during those 2 semesters or 2 quarters where they're not going to be generating all that revenue, the debt just basically allows them to keep the business afloat. So they have to have some level of debt just to stay, kind of afloat and keep liquid. But then, the 2 good quarters should basically kind of even that all out.
Yeah.
So if they offer preferred shares, I'm fine with that. That's a reasonable thing. But that's why I'm curious. I'm curious to see what the free cash flow here is and how much they starting to pay down the debt. I believe if they were going to offer preferred shares, last I had saw, they'd have to do that by mid-April. So we'll know by then
Okay.
if they're going to offer preferred shares. So we can
Okay.
look forward to that in April.
Yeah. And I think Kingdom wrote his article before the first Courage one, so he had it was a little bit of a different time, you know.
Yeah, and he's making sense of the transformation because Kingdom was onto something. He was looking at the FDC model, but it wasn't until after that last earnings report where you saw the FDC model it generate that 61 million in free cash flow. That's when Courage put out his article and was like, this thing's killing it. Like they're pivoting, saying this was going to be successful, and they're right. Kingdom was just saying, hey, they are pivoting, but we just don't know how it's going to be. So it's just, in time we get to see how it worked out. And obviously the FDC model was extremely successful. But
he had a hold rating. He didn't have a sell rating, so he had a hold rating.
Yeah, and I think that's reasonable too, because it had gotten so cheap that if FDC was successful, you were gonna do really well.
Yeah. All right, good stuff. I was just thinking that because we have been talking a lot of it's always good to test all sides, and I know we have talked about the recent development on the streams for both of us this week, but the opt-in scenario has now turned maybe not so bad anyways, right?
Yeah, I mean, I honestly, if this, like I said, if it becomes mandatory in schools, whether it's opt-in or opt-out, because what the mandatory thing would change is opt-in is a problem if you're not able to get into enough schools. So the opt-in model was scary at first in terms of like a bearish thing because it would limit the cap or the upside for this. But if everyone is now mandated to have an FDC-like program, well, now all of a sudden you got FDC in so many schools, it doesn't really matter if not a lot of students opt in comparatively to opt out, because you're going to make up for that in the volume of the amount of schools you're in. If you go from 100 or 200 stores to like 1,000, that's going to make up you're going to be fine. They're going to make so much money just on that it'll be fine. And like we said too, that would allow them to basically start to charge less for books and stuff, which would make it almost impossible for competitors to come into the market. So it will basically create this moat for BNED that it's going to be really tough for any competitor to come into. And if anything, you're probably going to watch competitors slowly leave the market as BNED continues to be successful. So they could slowly, you want to talk about cannibalize, they could slowly eat up all their competitors because they're not going to be able to stay profitable like BNED will. And that's the benefit of being a first mover. They have, they already have the whole system set up. All you have to do is come into the school and basically upload your software and start setting up the store. And then there you go, you're good. So they have a model that's already proven to work.
Yeah. And the next conversation is in March. And is it right that you have signed up to the actual conference?
Yes, I will be tuning in live. So anything that's talked about during those sessions, I will be on those. Like I said, I'll also tune in for the earnings call. So I'm excited. We got some real stuff happening this next week. So
yeah, we have been waiting for this
in the final session.
Yeah. And definitely for ALTO, I've been waiting since, what was it, early October?
Yeah, it's been a while.
Yeah. All right, we are in the dashboard here. Did you see NVIDIA 4%?
Yeah, NVIDIA's, it's killing it. I saw AMD had some really good days. I know I had talked about that saying, hey, I'm surprised no one's watching AMD because they're the second company out there who could truly benefit from this. They're very similar to NVIDIA. So the fact that people aren't really watching AMD, I'm like, I would, if you're bullish on NVIDIA, AMD is their biggest competitor. Like you should be focusing on them too. They have nothing to lose. if you're trying to buy a product and you want to get these graphics or GPUs, you could go to AMD just like you could go to NVIDIA, you know.
Yeah.
And AMD has always been a company that shoots for mass production over just having the really high end stuff. So I think you're going to see a few people, or like big companies that want to be the best, are going to go for AI that is the top of the line. But you're going to see a lot of smaller companies realize there's a lot of benefit from using AI without quite being the best processors. And they might go to like AMD and be able to utilize their models. So I don't know. I think there's a pretty strong market there with AMD.
Yeah. And I mean, even if Nvidia is more crazy in terms of how much it has gone up, the charts are very similar, you know. There's a big spike on both of them.
Yeah. So you know, I'm definitely bullish for AMD.
Yeah. A lot of things in the risk column was up, I saw. And I've noticed in the daily moves there's some home builders again.
Home builders are up. Is that what you're saying? I keep trying to click on something and it keeps going to the wrong thing here.
Yeah, I think they are up. They have been coming into daily movers for quite some time, at least in my ones. I know we have different filters, but
no, home builders are. I mean, this chart looks pretty good.
Yeah.
No, you know, the thing I'll say with home builders too, especially because I mean, I'm assuming it's all around the world, not just in the States, but we just don't have enough housing. I mean, the cost of housing is so expensive that I think there's just going to be a market there for them to keep trying to build housing because we just can't keep up with it, you know, and we'll see. I mean, the big issue right now is people trying to take out mortgages because the interest rates are so high. You know, that's where that's what's holding, I feel like, people from trying to buy a house is that it's almost unaffordable at these interest rates for most people.
Yeah. And I just quickly also pulled up the lumber chart, and that has traded a bit sideways, a little bit up, but yeah.
Yeah, I think I think at this point you're probably going to see a lot of the commodities kind of, especially lumber, because lumber really, at least in the States, comes from Canada and the United States.
Yeah.
And now that basically the transportation networks are all back to working normal after COVID's kind of all died out, I feel like you'll kind of watch that back to stick to a kind of an average, unless there's something that drastically affects that. You'll probably watch lumber kind of start to hold an area instead of being so up and down like it was.
Yeah. I'm just curious, in your dashboard, do you have the US, like the treasuries and stuff like that?
Yeah.
Do you have 1 to 30? There's one of mine, I don't look at these often, but one is down like 6%, and I don't see that so often. Maybe mine is a bit wrong.
I don't have any that are down 6%. Mine are all pretty much ETFs, I think, and stuff that it uses for measurement.
I'm using on US 1 to 30 treasury. I'm using Playway, PLW.
Yeah, I'm using GovT, GOVT.
Yeah, so we have a little bit of different ones. I just I don't see the bigger moves there so often. So just something that caught the eye.
I really think you're not going to see a ton of moves in those kind of things unless there's an interest rate change, because really those are just going to follow interest rates.
Yeah.
You know, and the thing that maybe is interesting over there, at least in terms of our style, is more like the junk bond type stuff, because technically we're always in junk territory. But at least for our, you know, our portfolios for this. So you know, if those look cheap on a long-term average, you could start to argue. But the question is, no matter what, I mean, we got to see what happens with inflation, which is kind of hard. I'm not going to be able to predict that. So, or even try to, for that matter.
No.
So, I mean, we'll see. But if interest rates come down, obviously those will do better. If inflation continued to go up, and then we had to worry about either, you know, dragging this out or possibly even a rate hike at some point, which I find highly unlikely. just because I think the economy, no matter what, is going to start to slow down here. As we keep these interest rates high, that's not helping anything. Keeping the interest rates around mid 5.5%, whatever it is, all it does is slow economic growth, which makes I feel like every time I'm looking on Wall Street Journal lately, you're just seeing company after company basically say that they want to cut the amount of jobs, or they're cutting jobs. So that makes me think, no matter what, that we'll probably most likely see interest rate cuts, but I'm not buying bonds to try and catch that upside. I think that's going to be limited no matter what. Even a bond ETF, I still think that's limited in how much you're going to get back there. If anything, I'm going to stick to the long side and focus on the companies, because that's you're going to make way more money doing that than you are in that kind of stuff. That's for financials. Those guys can deal with that.
For sure. I saw the gold miners and the silver miners are up a bit, and I pulled up a silver mining company or two on Thursday. Have you seen some this week?
Yeah, actually, in just on Friday, I have a few in my I think today in my list that are along those lines.
And the last one I paid attention to here was gaming, because I pulled up some casinos today, I think, that we plan to go through. And since October, the chart looks good in the. It's also like a ETF for gaming.
Yeah, it actually, I haven't looked at this one in a while. I tend not to look at a lot of like casino type companies. I'm not saying that they're not something to look at. I looked at Penn a lot when Penn was about to acquire ESPN Bets, which obviously hasn't really panned out much, but
I have seen them come into the daily movers a bit this week again, but I always find it a bit hard to calculate the upside, because of I'm not 100% sure about the laws and stuff like that in the countries that they are operating in.
Well, it's not
and if
only
they
that,
are limited because of the laws.
Too.
Sorry?
I said it's not only that, it's also state to state here.
Oh, state, yeah, okay. So I'm just not sure.
Like Nevada with Las Vegas is totally different than New York, for instance.
Yeah. So it makes me a bit unsure if the upside is limited because of they can't do much about it. You know what I mean?
Right. Well, yeah, I guess there's different things, and getting into sports betting and all that kind of stuff is definitely a big market now in the States. Like, that's really changed, but we'll have to see what it's tough to play that. Like, I think I would focus on like some of the companies like DraftKings and those if I was going to try to play that. Whether I like the ETF just to get an idea of something maybe to look into, but and that's probably why I really think all the gaming stuff that looks up right now, it's just because sports betting has become a pretty big industry all of a sudden, because a lot of states have legalized it here, where before online gambling like that in most cases was all banned. So the other one too, where do you think Bitcoin's going to stop? You think we're going to crush these new highs?
It's incredible right now. It's 62,000.
So we're tapping the ceiling here.
I do not want to have any comments on this, because you can look like an idiot in a year's time or something.
I mean, it's gotten up here before, so no, I'm not saying that it doesn't matter, but it's crazy that it's at 62 again. I thought after that last big pullback, I thought it would take longer to get back here. I didn't think it wouldn't get back up here, but I thought it would take longer than this. But I guess that's just part of the markets. When the markets are hot, people tend to be in these kind of things. Now, I'm definitely not a crypto expert in any way. I really I more just sit on the sidelines. I enjoy watching it. But
it's entertaining. But I will say this though, it tends. If you look at the chart, Bitcoin also have these huge drops, right?
Right.
So, but it might break out and get a new high.
I'll tell you, I would be nervous as a buyer in this area.
Yeah. Yes.
Because every time it seems to get up this high, it can pull back, 70%.
And I saw on Twitter that Jim Cramer has started to talk about it.
Yeah, of course. That guy's the death signal for things.
So if you follow the inverse Cramer strategy, I would be a bit worried as well.
So he's saying to buy right now?
Yeah, he said he was wrong and that it can go to 100,000.
Yeah, it's going to go back to 10 now because of him. He definitely
Watch
just
out.
killed it.
Yeah, okay. Now you want to go into some of the fundamentals?
Yeah, let's start going through some.
I don't
The only
remember
other
which
one
one.
that I saw moving a lot was I saw Rig had another big insider buy. And
Yeah.
I saw that was up 8.5%.
Yeah, I saw Rig here. You were in Rig, right?
Yeah, I captured a huge Rig. Rig was one of my first big plays.
Yeah.
I bought Rig. I think it was on one of the big pullbacks. I think I got in. I'm trying to think when it was. It must have been like $2.40 or something was my cost basis, and I rode that up to like 7 or something. So that was a huge win for me.
Yeah. You did well on that one.
Yeah, that was getting priced for bankruptcy, and there was no way. And all the offshore drillers were starting to look good at that point. So I was really surprised that it even went down as much as it had at that point. So
yeah, but it has had a rough period now for quite some time, but then up again this week. So let's see where it goes from here.
Yeah, no, like I said, there was some big insider buys for it, so I'm sure that helps the stock price.
Yeah. I'm thinking to start with the GDEN.
Yeah, I got them pulled up, so I can go right to them.
We are skipping the daily movers today because Dane and I did a little bit of that before the stream just to save a little bit of time, be a bit more efficient since it's Saturday and everything. So that's probably how we're gonna do it on Saturdays, right?
Yeah, if I mean, no matter what, before the stream, if I can go through and just get the tickers picked out, I try to, just because I mean, if someone wants to watch that process too, you guys can always comment and just say, yeah, that we'd like to see how you guys screen more.
Yeah,
that's fine. And some days I'm going to be screening on here anyways, so some days you'll probably get to see me do it, and other days not.
Yeah,
and you can also tune into some of the previous streams, because some of them I go through my screening process, so that give you an idea of what I'm looking for.
Yeah. So talking about gambling and stuff, this is one in that industry. They own casinos and stuff like that. So we jumped straight into it, and it was 7.5% down on Friday. The first thing I noticed is they had asset sale. Do you get the same?
Yeah, I got that they're up 352 from it.
They are up. What did you say, Dane?
I said that mine says that they're up 352 million from that asset sale.
Yeah, okay.
Is that what you have?
Sorry?
I said, is that what you have on yours for your asset sales? 352.
Mine is like almost 12 per share. I haven't calculated that.
Oh, you don't have, you have yours per share?
Yeah.
Oh, it's all good. It doesn't matter.
No, but it's the same. Yeah. But what I saw was also, do you have improved margins for last year?
I do, although, because of the fact that there's an asset sale, like, EBITDA and all that's in earnings themselves are going to look good. So I'm not really trusting that too much.
No.
Same with revenues, they can take all that into account.
Yeah.
So what I'm looking at here is more cash flow from operations, and that's a little bit more bouncy.
Yeah.
Not
'Cause
terrible. It's still up, and they've done a lot better since around 2018 is when they all started to do pretty well. 2020 was a rough year, but that's COVID, whatever.
yeah.
But
Yeah, and keep in mind that all the sports things were closed then, so they of course had a hit then. But I saw they have paid down a little bit of debt and that the book value is up, and also their the cash they have on the book. So all that is from the asset sale, I guess. But if they ever use some of that cash to pay down debt, that's decent at least.
yeah, they did pay it down a substantial amount of debt here. Either that or they refinanced. I'll pull up their. Looks like they have a 10K. Oh, actually, just recently had a 10K. Perfect.
Yeah.
I just want to see when their actual long-term debt's due here. It looks like they have some term loans, unsecured notes. Those are in 2026, the unsecured notes, which is 276. And 80 of it is their operating leases. So the next time that their debt actually matters, is that 2026, which is 280 will be due then. So if they're able to generate enough cash flow by that point, they should be fine.
Yeah. And I guess they paid off that term loan B then. That's what we saw, or?
Yeah, so maybe that's part of the reason they did the asset sale, was to make sure they could cover that,
Yeah. And that's something we like to see, But I noticed
you gotta
another
do what you gotta
thing.
do as a business.
Yeah. But I noticed another thing in that same year. CapEx is substantially up.
Yeah, so I mean, they could have used that money too to use for improvements on things or whatever, or even build out things. I noticed they also had a $2 dividend. I don't know if that's a one-time thing or.
Mine is 50 cents, but still a dividend just
Oh
for
no,
that year.
mine's the year. Yours is quarterly then.
Okay.
You know what I mean?
Yeah, yeah. Yeah, so they have some time on the debt. And mine shows up as safe, but barely.
Yeah, mine says levered, but it's also like right on the cusp. It does issue a little bit of shares based on trying to increase cash flow a little bit, which cash flow for me is down a little bit this year comparatively to 2022 and 2021.
Yeah,
but not terribly.
No. And I saw the
It's still not a bad
insiders.
business per se right now.
Insiders own 36% here, and it does trade 11% to the 52-week low. But just straight off what we are seeing here, I think it's a bit expensive still here.
Yeah, it's definitely not cheap enough for me. I can go through in just a second, see if I can get a little bit more realistic of a valuation here, because like I said, I don't always trust my valuator. It's just kind of a rough idea.
Yeah. And if you pull up the chart, I guess you can argue there's a little bit of a support here at 32, 33, 34.
I see Penn Capital, they own a 2% stake in them.
All right.
It looks like another one, Hill Path Capital, also owns a 2%. So there's definitely some ownership going on.
I think I saw Penn also in the daily movers. Is it a company also?
Who is it?
No, like a casino company. I don't remember the name, but the ticker is PEN.
Yeah. Oh yeah. No, Penn was the one that was saying they're the one who bought ESPN bets.
Okay.
So they're right in the mix. So it doesn't surprise me that they own some of this.
Yeah.
But
we have RK Capital here.
that's the guy.
You think
Can
yes?
you imagine if he had just created a fund and no one even knew about it?
We have him. Thank you, RK, for showing up on the stream.
Yeah, he's in the comments somewhere.
No, I think I do like the cash and the flexibility that, and I think they are spending it when we take a quick look like this on the right things. But it's still expensive for me. Have you checked out Seeking Alpha?
I'm just reading through an article right now. It looks like analysts are expecting free cash flow growth in 24 and 2025. It's expected to be close to 132 million with net margins close to 7.3, which puts their operating margin at about 13%, which isn't far off from where it's been. So that's probably not like completely unrealistic.
Okay.
He said some of the excess lands in good areas in Las Vegas. So obviously there's some assets that are worth probably a lot right there. And if they're able to generate that free cash flow over the next few years, they can easily cover that debt because how much do they have in cash right now?
250, I get 250.
Yeah, so that basically already covers almost that debt. So they're fine. The debt's not even a concern at this point. So like you said, even though it says that they're levered, that's not a concern.
Yeah. And I see in the article he's talking about share buybacks, but I don't think they have started that. But maybe with that cash on the books, maybe that's an option for them,
Yeah, I would argue I'd want this to get a little cheaper before I was going to do buybacks. I think if I was going to run a company, I would on the years where the price was expensive and I was going to do a purchase, I think I would do dividends and then either that or I don't know, maybe I would hold the cash just because they obviously can cover the debt in 2026, but there's another huge payment coming up in like 2028 or 2029 was the rest of the debt. So, you just kind of want to be cognizant of that's coming up. So, but I don't know. It also depends, what comes up and what they want to buy. And it looks like in 2017, they had a big purchase, of probably another company or something. So, or a casino or something. So you never know what their options are.
Yeah. I saw, He says in the article, company's board of directors increased its share repurchase program to 100 million, and that this is a bit old, the article, but it's 91 million left. So they haven't spent too much on it, just like you said. Probably they are also waiting to if it drops.
Yeah, I think if you're doing share buybacks, even like Buffett says, like he does for Berkshire, like he tries to wait until it gets under, like price to book. Because that makes sense in my mind. Then you're buying back, your company when it's cheap. But to just buy back shares at the wrong time, that's foolish. It's a waste of money.
Yeah.
I mean, I'm happy for share buybacks, but at the wrong time, it's a bad move.
There's no insiders since 21.
Besides the fact that I think they're a little expensive right now, I do like them.
Yeah, it would be a story to see what they do with that cash that they have. And like you said, I'm not worried about the debt at all. And what did we say? 26 was the next one? 2026?
2026, yeah. So we still have
Yeah.
2 full years, and like I said, they think they're going to generate pretty good cash flow over the next 2 years too. So,
Yeah.
what do you get as your valuation for this?
Yeah, I don't trust mine, but I could see like 40, 45 to yeah, a bit higher even.
Yeah, I get about 40. I wouldn't
Yeah.
go. I think this would be fairly valued if it continues to pay the debt down. And it has similar quarters. I would say this. I'd find a valuation of about $40 pretty fair.
If it drops below 30 though, it takes out all the lows, and if you look at the chart, just purely technical, it's a bit hard to. I guess the next one then is 20, you know.
Right.
Which would be a more. If this goes to 20, I'm interested.
Yeah, I mean, I would argue that around like 26, 27 would be an interesting area to get into it.
Yeah.
So obviously we'd have to see a pullback, but if they do continue to pay that debt down, that'll substantially bring up the book value of this.
Yeah.
Yeah, I think I'm gonna put this one on deck for me.
Yeah. Good.
The only thing I want to know that I wasn't able to determine is, was that a one-time dividend or was that like a continuous thing that we think we're going to do here?
And they were worried about a strike in Super Bowl period, but they avoided it, so it was all good.
Gotcha.
Yeah, one-time special dividend of $2 and 100 million buyback. That happened in 1st of August.
Yeah, I see that. So I think management's doing what they have to do here.
Yeah.
You know, and revenues were down a little bit, but you know, they sold off a core asset, so you're going to see revenues down. So that doesn't really bother me that that's down.
No.
If they were just trying to shore up the balance sheet.
Yeah, and I mean they have 3 consecutive years now with more than $1 billion in revenue.
Yeah, so even with the sell of that asset, or sale, I should say, it doesn't sound bad.
Yeah. Oh, we have a chat there, Dane, from Weenie. Hey, Weenie. Just finished a 12-hour drive, he's saying. Huh?
That's a drive.
Yeah, that's a drive. I think he told us that he found us on Thursday, Dane, through searching for BNED. So he's interested in BNED.
Nice. It's a great company.
I
I like the stock.
I love this stock.
Yeah, no, I am pumped for BNED's earnings. But you know, we'll see where it comes off at, but you know, I think no matter what, all I want to see from earnings is just that they stay kind of consistent of where the analysts are thinking based on what the free cash flow would be. Because as long as that number kind of stays similar, that's all I need to see from here on. Because at this point, I have a hard time after watching the sessions. Did you actually get to watch the YouTube videos, Johnny?
No, I haven't watched the videos.
Because if you watch the videos, I don't think they're going to reach consensus. I think it's going to stay opt out for a while because don't get me wrong. Like I said, even in this situation now, I'm pretty positive on opt in, but I don't think they're gonna be in unanimous consensus by a week. I don't
No.
know.
I have also
Maybe.
kind of concluded with that it will drag out till November. But it was a bit interesting. One of the ladies asked if they could have an extra session, but it's a bit bad of me, but I didn't check it again if that was because of the what we are interested in, or if it was another topic. I can't remember.
Right. Yeah, I'm not. I can't remember exact. I don't know if I caught that. I remember you telling me that, but I don't remember if I caught that and when they were talking.
It was at the bottom of one of the documents, but I don't remember which one. But we can try to figure it out.
Yeah, I mean, I tended to just focus on the one specifically about cash management and the books and tuitions.
Yeah.
But yeah, that's where we missed the other one, was because it was in the second part, and I didn't think they were still talking about the books and tuitions, and that's where they actually clarified on the fact that it would become a mandatory policy that schools have a program. So
you want to move on?
Yeah, I do like Golden. I threw it on deck, so that's what I was trying to do last. I was just trying to find if I could see where they said if that dividend was going to be a one-time, or honestly, I don't feel like reading through a whole 10K to find that, but but you know what I mean? Because it looks like they only pay a dividend occasionally. Do they have preferred shares? That's one thing I meant to check just to make sure.
I'm not sure about that, but yeah, I see the occasional dividend.
All right, what do you got? What do you got next?
SOI.
Solaris.
Yeah, Solaris Oilfield.
All right, I'm just updating mine real quick.
Yeah,
it's already there. All right, never mind.
They are approximately 20% to the 52-week low, a little bit higher. Oil company, oil and gas production and services. I see our share buyback here from 22 to 23. Bit of a drop in revenue.
Judd Arnold's Twitter Spaces chat. Have you ever? I'm not sure if I know who Judd Arnold is. Now I'm curious.
I got the BNED idea from Judd Arnold's Twitter Spaces chat. I'm sure you know him. Really impressed by what you two do here, and yes, we like this. Thank you, Winnie. And yeah, no, I haven't seen that Twitter space, but thanks for letting us know. Maybe we can jump in on one of those, Dane, if we see some of them.
Oh, he's Cornelia Lake. Yes. Yeah. Yeah, I do know who that is. Okay, I didn't realize that's his actual name.
Okay.
Yeah, actually, I didn't realize who that was. I talked to him on Twitter myself. He's actually talked directly to me.
All right.
He's also pro rig. I like him already. Yeah, I'll have to look a little bit more into it, but
there's a small BNED community.
Yeah, I'll have to look more into that. Thanks for pointing that out. Yeah, I just didn't realize that his handle was Cornelia, but yes. Yeah, he just started talking to me about something when it came to BNED, and we got kind of just talking back and forth. But yeah, I mean, it's reassuring to find anybody in, especially that's in finance, because, don't get me wrong, I don't think I'm like a complete moron. Like I do think I've picked up a lot of finance, and, I find anything that I really put time into, I'll get good at. Me not having a financial background, it's tough to have the same conviction I would if this was like my job, for instance. But, I do really enjoy the hobby of investing. It's a real passion. So it's not like I don't like think I can get there. So whenever I'm talking to some of these guys who have like really true financial backgrounds and they're seeing what I'm seeing, it just kind of helps me to, solidify my confidence in myself and where I'm getting out of this stuff. And, but yeah, BNED's definitely one of those ones that that we're excited about. I think there's a play here, no matter what. It's just trying to see what's going to happen from here. That's the good thing is I'm excited because the unknowns in BNED are all pretty bullish. It's more just which one actually works out.
Yeah.
Which is obviously what your goal for an investment should be.
Yeah, it's not a bad setup, and I just hope that there's nothing that ALTO surprised us negatively, so you can get surprised. Hopefully, it will be a good surprise this time.
Yeah, right. But yeah, I'll take any breadcrumbs they'll hand my way. I'll take. I want the loaf though, the whole loaf, not just the crumbs.
Yeah. Speaking of loaf, you mentioned loaf, right?
Yeah.
Oh, I had some delicious crab today for dinner.
Oof, that sounds great.
I had some great loaf as well.
Do you guys do you fish right off the coast where you are?
What? If I fished?
I know. Yeah. Well, I'm just saying, like, are you able to get crab and stuff right off your coast, or do you have to import that?
No, no, you can. We get it from here. Yeah, you can even.
Nice.
I'm not sure about the rules, but I think you can put out the stuff and catch them yourself. But I'm not doing that. I'm just going to the shop.
That'll have to be a thumbnail. Yes, is a crab fisherman.
You have seen Deadliest Catch, right?
Oh yeah, I've seen that show.
What is crazy. That guy? Stig Hansen? Is that his name?
I'm not sure, to be honest, but
he's from here.
Oh, is he? Cool.
Yeah,
that sounds right. That sounds about right.
Yeah. All right. Anyways, SOAI oil company.
Right. This it's a mobile equipment that drives supply chain execution, completion of oil and natural gas wells, specialized equipment that combined with field technician support. It's for the last mile logistics services and software solutions. So this is like actually right up to where the well is going to be developed. It looks like that's kind of what they're involved in here. It specializes in developing all electric equipment that automates the low pressure section of oil and gas well completion sites. So yeah, simple.
Good stuff.
Basic science.
Do you see the CapEx?
I mean, it's an oil company, but I did not. Why would it? Where is it?
Because mine is positive, and I don't understand how that's possible.
I don't have positive. I have negative.
Yeah.
So something must be a little wonky.
But do you have a big, like a big change from 22 to 23?
Yeah, I do. Because I had it just going by per share. I mean, I'm just looking at simple free cash flow. I had minus 28 cents, and now I have plus 63 cents. So, and I don't have that big of a jump from cash flow from operations. So obviously they're either spending less right now or they're just generating a lot more.
Yeah.
I mean, earnings and stuff are starting to come back up. It looks pretty good right now.
Mm-hmm.
But that makes me maybe worried that we're in the wrong part of a cycle here.
Yeah, I agree. I was thinking the same. And is yours showing safe here? They have control of their debt, right?
Mine doesn't say safe, but it doesn't issue any shares, so it's essentially safe.
I see they have a little bit in short term, but they have almost enough cash right now to just pay it off. So I think they are good, and they have spent money on buying back shares lately.
Yeah, the only thing though is, do you have debt climbing up for you?
Yeah, total. Yeah, a little bit. Yeah.
Yeah, because I mean, it's not that much compared to assets or anything, but I do have 48 million now. When it was, so it looks like it's crept up quite a bit this last. And they're sticking with this about 40-cent dividend per year.
Yeah, which is a bit annoying in this type of company, I think.
Yeah, what do you get as fair value here? I get about $9.
Mm. Yeah, I would say like six to nine. You know, he has reached way above that.
Yeah, actually that brings up, I'm just gonna pull up the chart so I can see what it looks like on a chart, just so I can see how cyclical this is.
Since February, it has gone up a little bit actually.
It swings quite a bit actually.
Yeah. But it does drop down to 6 every now and then.
What'd you say?
In the past.
Sorry, I didn't hear what the last thing you said was.
Oh no, I just on the chart it has dropped down to about 6 a few times in the past.
Yeah, I mean, I would obviously get fair or interesting. I'd be interested around that.
Yeah. Or they have different classes on the stocks.
Is it all just common shares though?
Yeah, it's common.
Yeah, I don't really worry about that too much because honestly, I'm not like super interested in voting rights. Like I'm not owning enough shares that my vote's gonna matter for these companies.
Yeah.
Maybe someday, you know, maybe for BNED. I mean, I hold a substantial. I'm telling you, I own a bookstore right now for sure.
Everything will be the first in BNED for us.
If BNED works out, then I'll start buying. Then I'll start looking at voting shares. But no, I definitely own a bookstore right now. I gotta figure out which college I actually own it.
That's good.
One of their 1,000 bookstores, I'm pretty sure I own. They're buying like you said, they are buying shares back though. So
yeah, they are. Oh no way! RK Capital here again.
Oh my God, he's everywhere.
But there's a guy, William Sartler, probably a founder or something. He owns about 11%. Yeah, he's the founder. I'm a bit... they don't seem to have any plans to cut that dividend, you know, especially now with the debt and everything. It's a bit annoying.
Yeah, well, some companies they want the dividend investors, so that's one way that they can prove. You know, I will say that, I mean, I know they're taking on some debt, but if it's not going to substantially hurt the business, if you're going to continue to pay a dividend, all that's trying to do is tell your shareholders that you're obviously confident that even though you might not have the cash right now for it, that you think you will in the future. So just trying to keep that dividend consistent. You know, it just kind of shows that management's saying like, hey, we're not paying this out like idiots. Now that doesn't mean it's true. They might be paying it out like idiots, But that's what I feel like they're trying to say is like, we're paying that dividend, don't worry about it.
Yeah.
I'm looking at the first Seeking article, which is by Donovan, and he wrote that he has a buy outlook. He says at 870 per share, so he thinks even right here it's still a buy.
Yeah.
He said fair value he got 1260, 1270.
Well,
I mean, that's a little high. Typically, mine are always more conservative than what those guys are saying. It's like I said, I got like nine-ish. So obviously I'd want to pull back here.
yeah, I'm in the same boat. This needs to drop a little bit for me
And there's so
to
many
put
people
it.
who just filed. These
Huh?
guys just filed on the. I said there's so many people who just filed. They just filed on the 27th as well.
Yeah, okay.
And it looks like all they did was they took on a $30 million credit agreement. That's where that debt came from. So, and that's a senior secured credit limit that has an initial borrowing, I guess, at 50, and they could increase that and then go up to a maximum of 100.
Yeah.
The only thing I'll say is it's a lot of interest to be taking on stuff like that right now. You know what I mean? Like I don't like people taking on stuff and then you end up paying all this in interest. We'll see. You got anything you want to add on this one, or?
No, I was thinking also the frack industry, and we have seen oil because we have talked about GTE in the past and how it tracks oil and stuff like that. And I just saw a comment here: what can trigger a rebound of the U.S. frack industry? And there's an answer saying like higher oil and gas prices, and it seems like, and I think. We have spoken about GT, right? That if it goes back towards 100 again, things will look very pretty.
Yeah, for sure. I'm actually still surprised after that last earnings report that GTE hasn't done more.
No, yeah, I agree. Yeah, he has a buy rating here. I think for me, I am not going to put them in the tracker, but there are things here that I really like. And, I have the system where I can see that I have done research on them. So I'm just going to leave it for now.
Yeah, I'm going back and forth if I want to put them on deck because I like what I see. I just wonder if there's enough here to do anything more than that.
Yeah. I mean, also the upside of, the 52-week high is 11, and he had a target of 12.
Yeah, I'm not saying, like I said, I'm not saying he's, in any way that mine's right. I'm just saying, just from a quick guess.
But my point was like, even for those upside, it needs to drop lower substantially as well for me.
Yeah, I get what you're saying.
Yeah.
You want to move on?
Yeah. The next one I have is GIFI.
All right, I'm just
Gulf Island Fabrication. And they are, if you look at the chart, they are in a good uptrend.
What's steel been doing? I want to take a peek at steel then.
This looks a bit ugly, but they do have cash though, and they show up as safe in my sheet.
Yeah, I have safe as well.
And you know, this last
and
year I
same thing,
have
there's
operating.
they have no debt.
Yeah, they have no debt, and I have operating cash flow for this last year positive, and free cash flow.
Yeah, it looks like they struggled during COVID, but before that, they historically look pretty good.
Yeah.
One thing I do get nervous about is if you just scroll down and look at well, I guess I don't know if it's scroll down on yours, but even EBITDA has just been negative for a long time now.
Yeah, and earnings as well, just negative, negative, negative.
Yeah, so you know, it's good that they don't have debt, but at the same time too, this book value is just going to continue to creep down if they can't get that earnings positive. So they got to do something here.
But they do have some cash now though.
Yeah, I'm not saying they don't have cash, but they're going to keep slowly eating that cash away at this rate.
Yeah.
That like if you look at their cash levels, like they've been paying this by slowly diluting shareholders, and it's a very slow dilution, but they are slowly diluting shares, which they don't have a ton already. I mean, they only have 16 million.
Yeah,
but
I can see that. I saw on Seeking also they sold property for 8.5 million now recently.
Yeah, but yeah, that just makes me wonder too. Like, you know, that you can sit here and sell assets off all day, but that still doesn't mean the business is profitable. Like,
There's a
I feel
lot
like
of
I'm gonna
comments on these articles.
Yeah, you're right. There is a lot of.
Oh no, Timothy is in here.
Of course, he is.
Timothy, our favorite. This is a bit old though, but he says breakout above $4 probably means it is going to 4.50 to as high as 5 in the near term. Exciting. And of course now it's at 5, so good call.
Yeah, he called
once
it right.
again.
What do I get?
Maybe we are late here. Did you see the chart?
Yeah, I'm looking at it.
You know, we are probably a bit late.
Yeah, I just I mean, I can see you argue that this is worth, I don't know, $4. I would argue this is worth maybe 4.
Yeah. 4.
But they really need to do something here.
Yeah, I mean, it doesn't look great in the sheet. I'm a bit curious about what has triggered this upside here now. That they have turned the operation positive, maybe.
Apparently, part of the reason this had sold off. So actually, what I think this is it's a rebound. It's less that the company's doing anything different, but they had a litigation by Hornbeck that had been resolved. He said the settlement adds a long-term liability to the balance sheet, but GIFI will retain its roughly $40 million cash pile that will cover all short-term capital needs. So if unforeseen circumstances arise and was forced to liquidate, I estimate that shareholders would receive a decent percentage of their investment back. So it sounds like the litigation went away. So it's more the fact that they're not an issue.
Yeah. Yeah.
And obviously, and then he goes on to say that he's saying a bare minimum price target for him is $5 a share. $100 million or more contract, if someone was to buy them, could be up to $6 a share.
He's very bullish though. It seems like he has a lot of articles on them, and it's a buy every time.
Yeah, I mean, I kind of agree with what he's saying about how he values it. I just I mean, like I said, I just usually don't want to value something based on what the market will pay for it. I get it; it's got a low EV and everything like that. I'm not saying it's not, in that aspect good. And who knows? I could obviously be proven wrong. But the other thing too is the stock price starts to creep up. You got less and less people interested because you have to pay such a premium to purchase it.
Yeah. Yeah, that's not usually in. It's just one factor, right? Not like a big part of a thesis that we usually go by.
Right. Yeah. I mean, no matter what, at this point now, it's too expensive for me.
Yeah, I agree with that. Feel like this one is a bit late here, and from here on, they just need to turn the numbers to be consistent, positive. And he said like with the what's the word what's the word, the
Litigation?
lawsuit.
Yeah.
With that gone, he was saying that they don't need to hold as much cash anymore. So he's curious to what they will use it on. So they need to show us.
Yeah.
But no debt. You want to go to JAKK?
To JAKK?
Yeah.
Yeah, sure.
Because I saw you had them up also, and that's a company I've been tracking for a while, and not too long ago they were above 30, but I saw they were down 27% yesterday.
Yeah, I think they missed earnings. I just want to be up front. I do own JAKK in one of my portfolios already, just to disclaim that.
I added them quite a while ago on my tracker sheet because there was a near-term catalyst that they own the rights to sell like Sonic the Hedgehog stuff.
Yeah,
before
they own
the
all
cinema
kinds of toy
movie.
rights.
Huh?
They own all kinds of toys, like toy rights.
Yeah. And this was just before the cinema movie of Sonic the Hedgehog. So that was like a near-term catalyst when I added it. And it didn't move so high on that, but since then I think it's more than a double. But now with
if you
this,
look at the long-term chart, it's pretty good.
yeah, of
Up
course
until
now with this
yesterday.
recent drop, it's a bit down again. But
yeah, I was gonna say up until yesterday, it looks pretty good.
Yeah.
I mean, even if you look at like a 5-year chart, like it was down. It was trading pretty bad. I mean, it was trading down into 350 area. I mean, it's a 10 bagger for there. You held it for 5 years. It's a 50% return per year. That's pretty good.
Not too bad, right?
Yeah, I would say. Jeffrey Sealer's in this one. He's saying the sell-off is oversold.
Yeah. There's a guy. There's a guy involved here, right? Who owns this guy, Lawrence.
Yeah, I'm just pulling up the Whale Wisdom now to see the ownership.
I think from my research last time I pulled him up, he is a expert in the field, and he was starting another toy company or something.
Gotcha. Interesting.
But yeah, when something drop almost 30% in a day, it can be an opportunity. What do you see here on this now? It's been a minute since I pulled them up.
You're talking for JAKK?
Yeah.
Yeah, I mean, it obviously doesn't bode well because it looks like after the Q4 results, that's kind of what scared everybody, and it sounds like there is some pressure. They said the costume segment, the sales were down 40%, which was a big improvement that they had done. So it's kind of tough to say.
But if you look at the fundamentals since 1 year before the pandemic, it looks pretty well driven. Like they have paid off for some of the debt. They have some equity growth, revenue growth. You know. So if they're missing a little bit now, the management, maybe you should. I don't know if maybe they have changed management. I don't know that. In those years.
Yeah, I mean, still, no matter what, I think this trade's pretty cheap. It looks pretty good to me, which was why I was bullish on it before.
Yeah.
Let me see if what I got as a fair value here.
I saw that Lawrence guy. He has not bought since 2022, or maybe he has with a fund or something.
Yeah, I mean, with the numbers I have this could be worth like $35.
Yeah, but it was recently there too, so.
Right.
Yeah, that guy owns almost 20%. And what did you say was the costumes? Was that what had hurt them a little bit this quarter?
Yeah, so they have it's like kids costumes, the thing with JAKK right now is I feel like JAKK does really well when there's a couple big movies or something that come out or whatever kind of thing that they're into, and they're able to kind of capitalize on, kids are really into that,
Yeah.
movie or whatever the genre is. So part of it probably is just that it's been a little bit since something's been out, but I mean, a 27% sell off in one day, that seems a bit much.
It's usually, at least for companies that we know of from before, those things are a bit, usually a bit much, right?
Yeah, I mean, so the reason I didn't put this into this portfolio and it's my other one is because I was more considering this like a good company and kind of something to hold on to for the long term.
Yeah.
And now I'm almost thinking of adding it to a watch list in this one because honestly, if this gets anywhere below $25, I mean, I'll probably follow it just a little bit more and do more research, but this would become interesting to me here.
Yeah.
I mean, you just look historically at their cash flow. I mean, it's pretty insane.
Yeah, it's good. Very good.
I mean, look at like what book value's done.
And you know that Lawrence guy, he seems to. His first buy was in late 21, and he has bought from $10 to $15, and he has only sold one small position at $12. So he's still in it and owns roughly 20%. So if he comes in and buys something around here, that's also a bullish signal for me.
Right.
Because he has some big buys as well.
I mean, he owns a big chunk of the company here, like you said. So,
yeah.
I mean, when you own almost 2 million shares out of 10, it's.
Yeah. Have you been? Do they have stores or is it just online?
I don't think it's not stores. It's mostly through that and other retail. But
Because I remember I checked their website.
But yeah, I guess the other thing too is trying to look forward and see what other things are coming out that they can take advantage of toy wise.
Yeah, that's what I see on the website now. There seems to be like a says Disney Wish. I haven't heard about it, but maybe there's some new animated film.
What
Wish.
are the big movies for 2024 for kids that are coming out?
Yeah. So yeah, maybe that's a near-term thing to watch out for.
I was looking through some of these things at Disney. So there was a few movies, I guess, that came out for Disney, but it was during COVID, so they never went to the big screen. So they're coming back out on screen.
Okay.
Because I was like, some of these movies are old; these aren't new. There's a new Kung Fu Panda coming out.
All right.
Garfield. That might be one that you could sell some stuff for.
Yeah.
Another Despicable Me. Those are always the Minions. Those are always super popular.
And I see they have some elf merchandise here with Will Ferrell.
It's a good one. Sonic the Hedgehog 3. So that will be them, but that's not till December.
No, but that was I think that did well for them when it first came out.
So yeah, so there is a few movies probably coming out this year that would definitely benefit JAKKS. So in terms of them maybe having like a rough quarter right now, I could see that maybe turn around where
I think 27% in a day is a bit crazy in this company.
Yeah, so I mean, just listening to this. So EPS, I mean, it was minus, but they still beat analysts by 10 cents because there's just not much going on right now, and it's a cyclical business, obviously. And revenue missed by 3%, which is 1.3 million of 127 million. So that's not really that crazy. But it said segment sales were up 1% globally. And they were flat in North America, but 7% internationally. And the other big thing, though, was just the sales of the costumes were down 40% compared to last year. So, I mean, the costumes were down, but it's not who's buying costumes this time of year? Maybe little kids,
exactly.
that might be something they want, but you're not going to see everybody buying that kind of thing. You know what I mean?
But maybe of course, I haven't read the the earnings call or something, the transcript. But I see on Seeking Alpha that it says after comments on the company's earnings call spooked investors. Maybe they have been a bit clumsy with their wordings or something like that.
Yeah, I'm gonna have to read their transcript because, like I said, this is definitely going to become interesting to me here.
Yeah.
This is definitely one that, like I said, I've already looked at it on them before, so I have a pretty good idea of how the business works. So if this, like I said, if this gets much cheaper, this might take start to take a position here.
Yeah. No, and like, I don't know if you read this earlier, Dane, but during the company's subsequent earnings call, CEO Stephen Berman warned that the light volume of blockbuster films in 2024 could lead to somewhat softer overall business in its costume segment. And it's like you say, that shouldn't justify a 27% drop overnight.
Yeah, I mean, yeah, I like I said, I'll have to go through this. I'll have to see kind of what the overall general feel is and why everyone is so nervous about this.
Yeah. No, but good fundamentals. You know, I just saw it earlier this week, and it was close to like $35, I think, earlier this week.
Right. No, obviously it was just the big sell-off recently, which, whatever, it's down a little bit, but it historically trades around $4 in cash flow a share.
Yeah.
I mean, that's, to think this isn't worth somewhere at least in the 30s, to me, it seems kind of insane.
Yeah. And what do you have as earnings in the last year? Almost 9?
Yeah, 850.
Yeah. Which is pretty good.
So,
that's pretty good.
It's ridiculous. That's what I'm saying. Like, I mean, I can see maybe like, like maybe it kind of leveling out around 35, but this big of a sell-off, $10. I don't know. This one's starting to look kind of interesting to me.
Yeah. Well, it's
Especially
already in my
with
tracker.
Balance sheet. This balance sheet is very clean. I mean, they have a little bit of preferred or something, but that doesn't scare. Not that amount.
No, I agree. It's this doesn't look so bad. And like you say, I'm a bit surprised because costumes, I would connect it more to Halloween, right?
I mean, yes, don't get me wrong. Like I picture like little girls wearing like like dresses and whatnot, like princess dresses. Like I can picture my nieces and stuff and like that they're gonna wear that kind of stuff.
Yeah.
But
and maybe since the movies, like he was saying, that there hasn't been so many movies, that they have focused more on those types of sales. I don't know. I need that stuff. Would have to read up on here now.
Right.
But yeah, I think those were the tickers that I had prepared. You had some as well, right?
Yeah, I have quite a few. Like I said, I do have to stop around 2 though.
Yeah.
But here, if you want, I can throw you just one more. If you want to just delve in through one more, you want to do Well, nah, this isn't a good one. There's not much on this one. You want to do BCOV, Bright Cove?
Yeah, we can do them.
Just BCOV.
Yeah. Just give me need to pull them up. Maybe you can read the business description meanwhile.
Yeah, I gotcha. So Bright Cove is a cloud-based streaming technology and service company. They offer solutions that meet the needs of media and enterprise customers in a variety of industries across the globe. With their use of streaming video, its solutions and products include Bright Cove Marketing Studio, communications, media, Zen. There's a bunch of different ones. I'm not going to go through them all, but it's basically it's for marketers and corporate communication professionals who need tools to deliver information in engaging, secure, and scalable manners through live and on-demand content. Their media studio is a comprehensive solution for over-the-top video services, media publishers, and broadcasters looking to monetize their media live streams at scale and nurture their audience's life cycle. Now, I've looked at them quite a bit ago, but it's been a little bit.
Yeah.
Have you looked into them before? They have insider buying. I think that's one of the reasons I pulled them back up recently.
Yeah, I have looked at them, yes. I'm just checking if they are in my track. I don't think so.
I mean, they work with some pretty big companies, Paramount, CBS, NBC.
Yeah. I have them up now, by the way. So yeah, there's been a couple of inside buyers. One from a 10% owner, and the other one from the CEO. They are not big buys though.
Yeah.
Chart is looking a bit bearish.
I'm just looking at their most recent presentation. I just want to get an idea of the stuff that they're offering.
Yeah. Let's see if I can pull it up here.
I mean, obviously there's big competition in this area. You know what I mean? Just have a weird beep noise. Was that you?
Sorry?
Just heard like a weird beep on my computer. I didn't know what that noise was.
I didn't hear anything, but
Don't worry about me.
probably the ocean behind you.
Could be.
Yeah.
Those seagulls behind me.
They have a solid amount of new business according to this presentation.
Yeah, I'm actually just trying to dig into where these fundamentals actually place them. Looks like they've been a little unprofitable just as of recently. So I think that's the bigger issue is just they're not sitting on a ton of cash or anything here.
No. And they have slowly issued a bit more. Sorry?
Sorry, what were you saying? No, you go.
They have slowly issued a bit more shares over the past years, and it looks like revenue is it's actually declining, and there hasn't been growth here, like.
No, I was thinking the same thing actually. The fact that they're not growing right now is seems to be that would be my concern for a company that's talking constantly about growth. Like if you're not even growing revenues, like I don't know. And it's been a slow dilution, but I mean, we're talking a 25% dilution. I mean, in 2013 they had about 30 shares. Now they got 43 million.
Yeah.
So
and in that time they have also increased the debt, even though they seem to have control of it right here, but it's still like, you see the market cap, this isn't the biggest company.
yeah, and like you're saying, I mean, they do have control of the debt, but like, they don't have a lot of cash either to play around with.
Yeah.
Is there anybody who owns this? Looks like Edinburgh Capital, but
Yeah.
it's, even though they own it, it's their 11th position, so it's not even.
You see B. Riley's there at the bottom. Do you know that Edenbrook?
I've looked at them before. I don't know much about them.
Oh. I can't find a website for them either. I feel like they should have a website, right? There's a lot of times I don't find much information.
I'm trying to pull up a website to see if I can learn a little bit more on them. They're on a podcast. Maybe you can get a little bit more out of them.
Yeah. Okay.
John, so John Brolin is the founder and managing partner of Edenbrook Capital, a $400 million manager of a concentrated portfolio of micro and small cap U.S. equities. He applies a private market approach to public markets, intending to own and add value to its portfolio of companies over a multi-year horizon. So it does sound like he is small cap value.
Okay.
Possibly growth too, but still definitely small cap. So it's interesting that they own it. I would consider them a reasonable, like, an owner that would make me interested.
Yeah.
But yeah, something's gonna have to happen with this business. There's got to be something, because as of right now, I don't see anything making this turn around.
No, I agree. And
I get fair value around like 2 a share, so it's kind of actually a little bit like, I would definitely want this cheaper than even where it's been at.
yeah, and I think by quite a bit as well for me. You see that in the 52-week high it has reached $5, but I cannot see it goes back there with no change here now.
Well, I mean, they did have a good year in like 2021. When was that? That was recently? That was that
Yeah,
high?
that was within the last year.
High to me. Yeah, but it's also like, this is a company that's reached a peak in 2021, and then all of a sudden, like, since then they haven't really done much. So
Yeah.
even though it did have a 52-week high of $5, that's only because it's been selling off this entire time.
Yeah. Because that chart looks terrible.
It's a pretty ugly chart. I'll agree with you there.
No, not that is a decisive factor on its own, because a lot of times it is like that in our strategy. But when you have these fundamentals as well, I don't see like their near-term spike up again.
Yeah, no, I'm not saying anything about, like, trust me, usually an ugly chart is a good chart for us, but my problem is it's got to go a little bit lower. Like, that chart's got to get uglier.
Yeah.
For me to get interested here.
And it's a
even
bit
if
like
it gets uglier,
like
it
you
might be
said,
because it's getting uglier.
with the management in the recent presentation are proud and pointing out all this growth, and on our numbers you just see declines. To me, that's a little bit worrying, right?
Yeah, I don't see what they see. I'll tell you that.
No, yeah. But they had some big clients though.
I mean, yeah, but I mean, if you're not making any money, I don't care who your clients are.
That's true.
You know,
Yeah.
like everyone keeps saying they're positioned for imminent growth, but it imminently hasn't happened.
No.
I mean, these guys said that they, Edenbrook, it said just filed the Form 4 purchasing 41,000 plus shares on the open market.
Yeah.
So these guys are saying that it's a little vote of confidence, at least from Edenbrook. But then the last comment, I kind of agree with this guy. He says the business is making 200 million of revenue every year with a 95% retention, spending 70 million annually on sales and marketing. It's a SaaS business that isn't growing. It kind of seems messed up. Costs have yet to be brought back in line with the business that isn't growing. He's like, this should be a 20% plus EBITDA margin business. Unfortunately, he's like, they're going to get kicked out of the Russell Index this year.
Yeah. That's what we saw, right?
Yeah, I'm gonna read through this transcript. I guess I'll probably save this one just because something maybe I'm missing something here. So I'll try and see what management's talking about and what they think growth will be. I know if you guys haven't really tuned in the stream all that much, I usually don't read this transcripts on here just because I'm not going to read you guys a transcript. We can all read it on our own. It's pretty obnoxious. But yeah, I don't think I have anything just yet that catches my eye.
Oh, I agree. I have definitely looked at them before, but it doesn't qualify to be put into my tracker, I think.
Yeah. All right, man. Well, like I said, I do got to get out of here.
Yeah, all good.
But I still got a few tickers that if I don't get covered today, I'll probably I'll hopefully get them through them before the stream. But if not, we can go through them on the stream, and then we'll have stuff from next week to go over.
Yeah. And hopefully
we'll see
in a
what
week
ends up doing here at the start of next week before earnings. We'll see if there's any kind of further retreat, just because the people are worried about that delisting. Which I mean, who cares? What does a delisting warning even matter? It's not gonna delist.
Yeah. No, I'm not worried about it at all. But it did held up 90 cents pretty good. But let's see on Monday. But yeah, we hopefully in a week we can sit here happy and with a good earnings report from BNED. It's definitely going to be interesting, and we will keep you guys updated on this coming week. And then any news about ALTO also is something at least I pay very much attention to right now. And you're gonna do Tuesday this week, right?
Yeah, unless something changes, but yeah, I still plan on doing Tuesday.
Yeah.
So we'll see.
Yeah, but we did find some interesting stuff here today, though.
Yeah, no, I'm like I said, I want to look through these few transcripts as well.
Yeah.
But yeah, we'll see what's going on with JAKKs. I want to definitely look into that, because if that sells off anymore, that's going to become really interesting even for this portfolio, because I can see a 50% return still here. And then what was the other one? Was there another one that we had thought looked
No,
pretty
we
good?
like the GDEN had some positive stuff going for it, and you know, the Stabos one that he was in, we were a bit late, but the SOI was a bit interesting.
Yeah, I agree. Yeah, so we'll see. There's definitely some interesting stuff here.
But good. Thanks to everyone who tuned in, and again, thanks for everyone subscribing to the channel. We are very happy about the tiny growth that we are seeing, and I hope more people will continue to use the chat as well, or the comment sections. We get some comments. We got some comments this week, so we try to answer as fast as we can on the comments as well. But yeah, we see you on Tuesday then, Dane.
All right, yeah, we'll see everybody then.
Oh,
Yeah, same.
subscriber.
Thanks for everyone tuning in.
We got a subscriber alert, Dane.
Oh, did we? Thank you.
Just
Thank you
now.
to whoever subscribed. Sorry we didn't get to call you out. I didn't see it.
Yeah, we know that it's like many minutes behind, like the alert, right? So probably did it a while ago. But thank you.
Sorry, it's always a pain how long it takes to subscribe. But what
Yeah.
Oh, it was well, either way, thank you. We appreciate it, man.
Yeah. All right. See you guys. Thanks for tuning in, and we see you on Tuesday with Ranger Dane behind the screen. Then.
Yeah. Well.
All right.
We'll find. We'll see what happens. We'll see what happens Monday and Tuesday here.
Yeah.
All right. Thanks, everybody.
Bye bye.